The one thing, and I hesitate to say this, but I have to throw it out. I know manufacturers have already started. Tesla writes their own coverage. Toyota's starting to write
Mm.
their own. I do believe that at some point in the future, they are going to get it right. It's going to make sense. There's going to be efficiencies for the owners, and the current model for personal lines insurance is going to shift.
Hey, so this episode is with Bob Cretel. He is the CEO of Cretel Leadership and Insurance Claims Consulting. So I've dubbed Bob as the Godfather of Claims. That's his new nickname from me. So Bob, you have over 40 years experience in the claims arena, 20 of those spent at AAA, another 20 at State Farm. But I want to bring it back to 1982, where it all started. You started your career with Liberty Mutual. So what got you into the business and what's kept you around this whole time?
Thank you, Lee. That's something I love talking about, actually. I was talking to someone when I was just graduated college. Right? I graduated high school, went to college, had 4 years, had no idea what the universe was about. And I was talking to someone whose parent was on their way to Miami to investigate an accident involving a Rydell football helmet. He was in the general reinsurance business. And I said, that sounds fascinating, trying to figure out what the injury, what caused the injury, what it's worth, all of those things. And I was told that if you really want to get into the industry, go work for Liberty Mutual because they have the best training. So I did. And September of 1982, I started with Liberty Mutual. And I have to say that the training was extremely thorough. And one of the differences, we'll talk about it a little bit, is it was a lot focused on the fundamentals of the tort system and claims and determining responsibility and liability and degrees of liability and looking for the evidence to support your position one way or the other. A lot of contract analysis, a lot of lawyer negotiations. And what to answer the second part of the question, what sucked me into the industry and kept me there was it is one of the more it requires a versatile number of tools. You have to, one day you're a lawyer, you're a doctor evaluating certain medical reports and injuries. You're a bit of an engineer doing mechanics, the reenactment to see if it could even have happened the way it was alleged. There's a lot of psychology involved, a lot of customer service. So it really plays on so many different skill sets. And ultimately what I landed on, Lee, was that it allows me to be altruistic with somebody else's money. So I can make your problems go away really easy. And it makes you feel good. And as long as you do it in the right manner, everybody's happy. And so it's been a phenomenal career for me. And I've really enjoyed almost all of it. I can't really think of too many areas where it was disappointing. There's challenges, but it's just a great an industry altogether.
So you've seen obviously a lot of progression from 1982 till now as far as technology and things like that, but it also seems like it's a double-edged sword based on what you're saying, where there's great advancements in technology, but then that might also, people become too dependent on that, where they lose some of those fundamental skills needed to accurately and efficiently do these things. So it's the same. I came from the title and registration side, where everybody wants this like magic bullet of just press one button and everything's gone, but it really takes skilled, educated experts in that title and registration field. Because you're right, a lot of them, they're like lawyers in their own right? Studying contract law to make sure that it's compliant and all that good stuff. So I guess a two-part question is, what major game-changing moments from a technology standpoint has occurred in the claims process? And then on the flip side, how is access to all this data, or how is too much technology could potentially be a bad thing, or we're starting to lose some of those quote unquote experts needed to get the job done?
Yeah, no, it's an interesting perspective. I think it's more of an evolution than a revolution. All of society has dealt with the advent of the cell phone, which is really an insult to the handheld device. It's way more than a cell phone. But one of the things that I think really changed claims was when we came up with an interactive claim system. So prior, everything was handwritten in a paper file that was designated for one place. And so it made sense that one person had access to it and one person did everything because it was not easy to share the data. Once you got to the point where I could upload some information and then several people could go work simultaneously on different things, it really changed. And saw a little bit of a lack of ownership. I'm only going to handle this coverage. I'm only going to handle this part of this coverage, and I can ship things off to everybody anytime I want. And what I've seen happen is a claim that was once handled start to finish by one person is now the same exact fact situation could be handled by 8 different people. You have your injury rep, you have your property damage representative, your total loss representative, the person who handles the damage to the collision, and maybe somebody handles med pay. And you certainly get some efficiency doing the exact same thing over and over again. But what you lose is some continuity. And from the customer, the policyholder, the claimant's perspective, there's a lot of inefficiencies in those handoffs. And I think that's
Mm.
where we've come now. I think that's where my focus is going to be now, is saying, I think that particular model has run its course. I think now we need to get back. The tools have evolved so well that now we need to get back to that one generalist who can say, I can handle this particular situation using IA and all the different tools. I can handle start to finish, and I don't have to refer things off to several other people to help me get it done. I think that's an area where that's the next step, in my belief, in what's going to happen with insurance claims.
Got it. So I guess the need, or I guess why things were splintered off in the first place was, one, technology evolved, so more people were able to do more things at once. But was it all derived from to get these claims processed faster? Is that why? Because if it just bottlenecked with one person, then it took longer to get through all of them? Or is that where the initial need came from? Or is that the main problem?
Yeah, I would think so. Speed becomes very important. And fiduciary responsibility. We want more eyes on it, right? So if you're an auto physical damage expert and that's all you do, theoretically, you should be better at being able to manage expenses from the shops and from the manufacturers and the parts and everything else. That is your sole focus. We're going to expect that you're going to be very good at that. I think what has changed is now, with the tools that are being brought to us by, excuse me, I'll throw out a couple of companies, CCC, Mitchell, all of them. The tools that are being brought to them now, A, can evaluate an estimate from a shop to tell you whether it's in line or it's out of line with what your expectations are. So you don't necessarily need to be an expert in repairing a car as we once were, right? That was one of the big areas. We went to Vale Tech when we were trained. We actually worked on cars.
Gotcha.
But they've become so sophisticated. It's really hard anymore, in my opinion, for an insurance person to be trained to go inspect an Audi in the morning, a BMW on the way home, an electric car in the next afternoon, and everything else. So I think it's almost time to allow some of the technology to work for us and help that one person get the claim done as quickly as possible.
Are things still a little disjointed in that sense, or all the pieces are there, but it still needs to be welded together? Or there's some insurance companies that are doing this really well, and then others just haven't caught up to putting all those technology pieces together? Or what's your general thought?
There are certainly companies out there, carriers out there, that have adopted technology at a far better pace than most. We are an industry of, and I've been in it long enough to be able to say this with some degree of confidence. The first thing we do when we start looking at something is we ask ourselves, what's everybody else doing? And as soon as you get somebody going down that road, we all end up doing a lot of the same things. And it is a very scary position to be in when you decide to deviate from the herd and you're going to do something
Mm.
entirely differently, because there's a lot of money at stake. A lot of money flows through claim departments. And right now, especially, the margins are gone. And with the pandemic and the post-pandemic impact of the economy, insurance companies are not doing particularly well financially. So it's tough for them to look at something now and say, I'm going to make a major change, not fully understanding the implications of it. and recognizing that there's always that J curve where you're going to lose some efficiencies, you're going to lose some control to some degree. Once we get going, and I think people see where it can go, I think there's a possibility for it to really improve the overall performance of the company as well as provide a better service to the customer in general.
Got it. I do have to do a little plug for you here. So you retired from AAA, the Auto Club, April 1st, and you are now launching your consulting firm. Is that what you're going to be focusing on? Is working with these carriers to help them maximize that type of efficiency from a claim standpoint, or what is your vision for that?
Thank you for the plug, by the way. Yes, that's basically what I would like to do is share some of the experiences that I've had and give them some perspective as to what can be with the technology. A lot of people that are in positions of leadership now have not worked in an environment where they've handled something from start to finish. So the concept, I imagine, is quite scary for them. The people I've talked to struggle to understand why that would be a better model. My basic focus wants to be, I really, like I said, I'm passionate about the industry. I think it's one of the, if not the most important industries in our economy. And so I would love to really emphasize the fundamental basics and having people understand why what they do is really important. And I think this plays into what you just mentioned, what I was talking about with making people more start to finish involved in the claim, because little things like finding a witness or obtaining a statement sounds like a task that I might be too busy to do, but that witness might provide evidence that keeps the claim within the policy limit or allows you to defend it. And that within the policy limit means nice for the insurance company, but for the customer who's paying the premium, it means they may not have to come out of their pocket to pay the balance. And I think that's a really important part of what the industry stands for. And I think it's something we can do a better job on.
From what I'm reading and looking into, the last like couple quarters have been a little rough for these carriers. And what is it? What creates that? Are these like perfect storm scenarios? I understand with pandemic is okay, people weren't driving and people were making money. And then when they started to drive, everybody seemed to be crashing into everybody all the time and created this pendulum swing. But what is it? I'm sure it's very complex, but how does an industry as a whole get affected when you would think that in today's age, when there's so much data, so much information out there, predictive analytics that could help them avoid certain things? What happens to where we get caught in this position where we totally misread the market or claims from a claim standpoint?
Yeah, it's a great question, and it's actually a fascinating study. Several things happen. Insurance companies we are really well adjusted to the idea of adapting to a catastrophe. So suddenly an influx of claims comes in. We can designate the people to go to that. We have certain IAs we work with, independent adjusting firms that we work with, and we can handle that. The one thing we're not very good at, which because it very rarely happens, is when you suddenly don't have work coming in the door. And nobody really knew in the beginning how long that was going to last. And so obviously we were making money. And if one of the things that you saw happen around the country, all of a sudden the regulators, the departments of insurance around the company started demanding rebates for people getting money back from their insurance carrier because the claim frequency went down so much. And again, I understand it. However, insurance companies don't immediately raise rates when there's a catastrophe and claim prices go up.
Right.
And it's just like you and I putting a savings account away. We want to make sure the money is there for when it rains. So the next thing that happened, once the roads opened up a little bit, everybody was traveling at a faster pace than they normally travel. And I'm in Southern California. Our freeways are jam-packed all during rush hour. So suddenly, for the first time in my 30 years living here, it was wide open. It was the Autobahn, and everybody was going faster. And when they had an accident, it was a bad accident. And so that increased. So now you've got a perfect bad storm of less frequency, higher severity losses. You don't have those little fender benders that happen in rush hour traffic at 5 miles an hour to offset the larger the larger losses. At the same time, body shops were going through a restructuring, resizing. They had people who were not being paid. They left the industry. The Because of the pandemic and the impact on computer chips that are needed for cars now, new cars weren't rolling off the assembly line or being sold as fast as they normally were. So used car prices went up. And now the cars are being totaled, which is the basis for a total loss value. So suddenly you had used car prices going up exponentially large. Just amazing how quickly that happened. And so the insurance company is, most insurance companies set their premiums either 6 months or 12 months. So I collected premium from somebody for their particular car 12 months ago, and the car has an accident and it's worth 50, 60% more than what I expected it to be worth.
Yeah.
So now I'm upside down there. You mentioned getting people back to work. That became a bit of a challenge. And then finally, when the insurance company started showing these losses, which they have a surplus, they can handle some losses. In some states, regulators were very slow to respond. They spent a lot of time being consumer advocates rather than really trying to manage the insurance coverage and making sure there were solvency issues. I haven't heard of too many carriers going insolvent necessarily, but I know there's a few that are very worried in certain markets. So it was something we had not seen before. And even when it started to open back up, one of the things that we're seeing in the auto repair business now, and one more before I go there, rental cars didn't exist. A lot of the major rental car folks started selling off their used cars because they weren't sure how quickly it was going to come back, and they were making a lot of money on used cars. So then when frequency started to come back to pre-pandemic levels, suddenly the body shops didn't have all of the technicians that they needed to fix the cars. The rental car agencies didn't necessarily have the cars on their surplus so they could lend them out. And it really made it very uncomfortable for people in the industry. I don't think we're fully out of it. I imagine we won't be out of this until 2025. And then we'll still be dealing with some residual negatives from all of this, I think.
Yeah, I mean, you're right. This is going to be one to study as a case study for future
Definitely
national or global catastrophes. But that makes sense. So it sounds like there was like many things that are all happening and domino effect across multiple industries that kind of created that environment.
Exactly.
So that's an anomaly, hopefully, knock on wood. Go through that again. But one other thing that has popped up in the last couple of years is the usage-based insurance. Overall, I haven't really dug too deep into this, but what are your just general thoughts on usage-based insurance or telematic-based insurance? What's your view on that?
Yeah, it's an interesting concept. I think its time is coming. And again, I mentioned earlier, insurance companies aren't the quickest to respond to technology. And a lot of times we do take a wait and see approach to things. And I know there's a lot of smart people that have their eyes on the industry, mostly because there's so much money available floating around. One of the concepts of insurance that always struck me is that any given time, half the people are paying too much and half the people are paying too little, right? There's very few people have the exact premium for their exact risk. And so I do think that if you do get a usage-based program and you can align the risk with the premium, I think it's going to be very positive for consumers. And I think it'll be better for insurance carriers. I think they'll have a much easier time selling a very good algorithm that really nails what the exposure is based on the person's specific characteristics and driving style, type of car. And I also think, as I mentioned earlier, car values have a tendency they used to always have a pretty straight line. The one thing we've always had is the benefit of law of large numbers. But one of the things that we're seeing is now there's all kinds of new cars on the market, some electric, some Rivian, Teslas, all these different manufacturers popping up using different technologies. And some of them, the values may not hold up over time at the same trajectory as cars have normally increased in value or decreased in value, excuse me. So I think having a real aggressive algorithm to understand what's going on with the car, what's going on with the driver, and what's going on in that particular market where that car is being operated, I think could go a long way towards helping getting the premiums a lot closer for more people to what really is their risk. And I know cars are coming up with subscription services as well, which makes it more
Sure.
complicated, right? So now
Yeah.
you may insure a car that you signed up for the subscription to add these safety devices, then you suddenly cancel the subscription. Well, the risk has just gone up. And how do you keep track of all that? It's very complicated, but I think it can be done.
Yeah, and fast forward with if you look at Uber, like they can't wait until they can go full autonomous, right? Because that's their biggest expense is the driver. And obviously there's Waymo, there's Cruise, there's Tesla that are all pushing towards full autonomy fleets. And so if I'm just regular Joe Schmo, I want to go to the store and I summons a autonomous vehicle. I don't know when this will be, 10 years, 20 years, 50 years, but who, and then on the way to the store, I get in an accident. Where does that insurance lie? Do I have to pay a 5-minute premium to get to the store and back, or where do you think that'll all play in from an insurance standpoint?
That's a fascinating concept. I'm not 100% sure. If you think about, you have to look at who is responsible for the accident happening. And if it's the person that summons the car, but they had absolutely no control over the vehicle's motions, then they really shouldn't be held responsible for what the car does. The one thing that I'm curious about, and I don't want to open up a Pandora's box necessarily, but the one thing that I'm surprised I have not seen more of are lawsuits against the manufacturers. And they might be out there. They might be very quiet about them. I actually was on a meeting once before with several manufacturers, and I asked that question, and I was abruptly told that we're not going to tell you that. Because if I can see the plaintiff side, I can see the plaintiff attorneys seeking, they have to feed their families as well. And I can see as the car becomes more and more of a autonomous vehicle and all these safety features are employed, if the car does not function as intended, it starts to go from the driver's responsibility to a product liability situation. I've driven cars. I was just had a rental car recently that had the adaptive cruise control, which I absolutely love.
Yeah.
You take your foot off the gas, you're pretty much just driving with your hands. And as I was driving and it was stopping for stop and go traffic, I was scared to death. But if it stopped and suddenly didn't work, I guess it would be my responsibility ultimately. But at some point, you could start to point to the picture that, hey, grew to rely upon this technology. You led me to believe that it was going to keep me from having this accident, and it happened. I think there's some product malfunction involved in this. The one thing that I've noticed in the advertising is not the manufacturers, and I don't want to insult the manufacturers, but most of the manufacturers are not referring to some of these features as safety features. They're calling them convenience features. The Denali, hands-free. That's for your convenience, not for your safety, just so that I think they can at least have some plausible deniability if it ever starts to go that way. But I think it's going to continue to start to shift to the manufacturers. I think
Hmm.
it's going to be a product liability situation in more and more cases, which, and I don't want to keep going, but I think it also puts a lot of onus on the repair facilities about how they fix the cars and who dictates how that car gets fixed, because that's going to be more and more of an opportunity for somebody to be responsible for that car not operating the way that it should or was designed.
Yeah. Yeah, I guess you're right. As that fully autonomous mecca, as we get closer to that, I could see it shifting more and more towards manufacturer responsibility. But this is actually a good segue into when it comes to damages, because these cars are getting way more sophisticated. And you've probably been asked this question a million times, but total loss claims are going up, right? If you look at overall percentages, they're going up. And with how these mini computers are, these real computers are with 4 wheels, they're getting more and more expensive. So do you ever anticipate the total loss percentage plateauing, or is that just going to continue to go up the smarter and the more expensive? Or is there going to be a shift where it's in technology or in manufacturing that is going to reverse that curve and drive those total loss down?
That's another really good question. My thoughts are this, and I'll give you a little background. I was at a Verifax conference a few years ago, and there were manufacturers there, and it was fun to talk to them. And we talked about how expensive they are to fix their cars, and then try to explain to them the total loss salvage market, what happens to their cars. But one of the things that I learned in that particular conference was that when a car is involved in an accident, the owner of the car, 97% of the time, they look at competitive vehicles rather than the same make of the car they just bought. So manufacturers don't really like total losses. I also found out at the same conference that about 97% of the people shop their insurance at the same time. And insurance companies don't want that either. So I think where this needs to go, if you look at the way we were historically, it was a very adverse relationship between insurance companies and shops. The only reason the insurance adjuster existed was so the shop didn't rip you off. Some of that has changed now as the shops, the old artisan guy who could hook up a frame to a back oak tree and slam it and get the frame lined up. These guys are really engineers and technicians and have to have computer savvy and have to fix the car specific to manufacturer guidelines. And so all these technology pieces that you were talking about all work the way they're supposed to. So I think the time is right. If it doesn't happen soon, if it doesn't happen now, it's going to happen pretty soon, where the three big entities that are involved in keeping the roads safe and making our motorists comfortable with the process, the manufacturers, the body shops, and the insurance companies have to get together and say, we're going to work a little closer together than we have in the past. There's a lot of legislation around the country right now. I've been keeping track of about manufacturers might be getting laws passed, even in states like Texas, that say that if you have a Ford vehicle, I'll use Ford, for example, you have to use Ford parts. You cannot use aftermarket parts. I'm fine with that. But I have seen how when the aftermarket parts came into place, the price of a new part came down. And that's good for the consumers. It's good for the insurance company. It's good for the people paying the premiums. If we can all work together and ensure that the car gets fixed, that the parts that we use are appropriate for that repair and can do that repair, then I think everybody comes out of this better. I'm not necessarily holding my breath right now, but I do think that it's at some point it should happen if we want to really do the right thing for the consumers out there.
Got it. That makes total sense. I would be remiss, mainly because of my background, if we didn't talk about the title and registration, or at least title and registration data aspect of this. Because just a quick story, about 12, 13 years ago, we started another company in California, which is an electronic vehicle registration provider for car dealerships to electronically register vehicles. When I was explaining what we did to friends and family, they're like, oh, like AAA. Oh, like AAA. I'm like, yeah, yes, like AAA. So AAA has been a great segue or method for me to explain what we do. But, and then, as we talked about, title and registration and insurance go hand in hand like peanut butter and jelly. When it comes to titling and the title data and registration information, things like that, how is that playing a role in claims management? Is it playing a big role, or do you see that playing a bigger role in piecing those two together? If that's even a real question, I don't even know.
Yeah, no, it's a big role. It involves total losses, but it also involves, we want to make sure we pay the right person. So if the car is damaged, we want to make sure we pay the person who's the registered owner. They have the vested interest in that. So having access to who that vehicle is registered to is extremely important. There's obviously privacy constraints about just having it out there for everybody, but we also see it with witnesses, trying to find a witness who we got a license plate, or they could be a party to a loss and we want to contact them. We have the part of license plate. It really is important that we're able to get that registration. So I think it is really important that we make that information available in a safe and appropriate manner. And then obviously with total losses, that's generally one of the biggest It's not that difficult to come up with a value. And insurance carriers are pretty darn good at issuing checks, making sure we pay the right person and people, because there might be a lien holder, is really the challenge when it comes to a total loss. And now that total losses have hit 20, 25, 30% of the claims that are out there, this has taken a more front and center priority in terms of helping the carriers get the claim resolved. I think credit to you guys for coming up with an electric title solution. That's hugely important. I think if we can do more of that, I know some states allow them, some states are not as quick to integrate into that world. But the more that we can come up with an electronic title, we can readily change it and share it. I think that goes a long way towards making this a far less laborious process for everybody involved. And it seems like it should be able to be done. The DMVs have all the records, they have all the registration data, they have the information. It shouldn't be that difficult to share it.
Yeah, and I think that's what's exciting right now for our space is both within the insurance, finance, and auto retail space. What has typically happened in the past is happening now is these states work in silos, right? These DMVs, they work in silos with varying levels of technology and access and all that, and data sharing and all that good stuff. But there's a lot of really good companies out there that are bringing all these states together and making it seamless. So like larger organizations, like insurance carriers, can just tap into one place and go from there. But to your point, there's still a bunch of pieces that go into it and different technology providers that tackle a certain piece of it. So it's going to be the same kind of deal where over time, that's got to blend into a single spot to where nationwide, you can handle that soup to nuts, get the information you need and title it however you need to, all in one place. That's exciting on my end. So I guess to wrap this up, what are you most excited about when it comes to, I know you touched about a little bit earlier, but what's the most exciting thing that you're excited about when it comes to the future of claims and how that looks 5 years out, 10 years out from now?
Yeah, I think having watched, again, I make the joke that when I started, the technology was once your ink pen got low, you get a new ink, right? That was your technology challenge of the day because we wrote in files. I think there's so many great tools, your company and coming up with the tools for titling and all that. There's so many good tools, photographs that can write an estimate based on artificial intelligence, digital reporting of losses, the EDR data that you can get from a car, just GoPros that cars have on their dashes now and Teslas with cameras all around. All of the tools and technology are right now they're pretty disparate. Everybody's got their own thing going on. When we can, as I mentioned earlier, we can start gathering that and bringing that into one person, where one person now has access and understands all those different pieces of technology. I think we can really change the game and how quickly we can get a claim from the accident that happened until I'm going to make the payment. I have seen models where you've seen the commercials. I know what happens on Star and what have you. And a lot of even some of the cars, I have a Ford, and my phone will tell me if I'm involved in an accident. It says you're involved in an accident. And if we can link that, okay, now, do you want to take it to the shop? Do you want to get it fixed? And the cars will start to do self-diagnostics. Your car is repairable. I know what's damaged, right? It's how. Right, from the old Space Odyssey movie back in the 70s or 80s. The car will self-diagnose. It will tell you where it needs, what's broken. The parts could be ordered. All of that working in unison helps get the policyholder, the customer back online. The one thing, and I hesitate to say this, but I have to throw it out. I know manufacturers have already started. Tesla writes their own coverage. Toyota's starting to write their own. I do believe that at some point in the future, they are going to get it right. It's going to make sense. There's going to be efficiencies for the owners. And the current model for personal lines insurance is going to shift. And carriers are going to be a big part of insuring your car. The part that I have not been able to necessarily solve for is the multi-car discounts, the multi-policy discounts, the umbrella policies. all of those will be separate somehow. So I think that my Notre Dame expectation may never come to fruition, but I think there is a lot of drive towards manufacturing being able to be in the best position to insure your car, ensure that it gets fixed properly. They just have to be cognizant of the cost. And that's going to be something that I'm really excited about watching in the next 7 to 10 years, I think.
Oh yeah, that makes sense because they have the data from their vehicles, from their drive to direct line, direct feed in real
Right.
time. No, that's awesome, Bob Cretel. Thank you very much. If anybody wants to get a hold of you from a consulting standpoint, LinkedIn, email, what's the best route?
LinkedIn is a great way to go. My email is, and I'll share it with you afterwards, but rcretel1@gmail.com. Right now, that's the email I'm working with. But yeah, no, I appreciate that. And I'm hoping to get some pretty active on LinkedIn here soon. I'm just waiting for next week to see how that goes, and then we'll take it from there.
Beautiful. Thank you, Bob. I appreciate it and I look forward to talking more with you.
Thank you. I do appreciate it, Lee, and best of luck.
Thank you. Bye.